start. Welcome everyone. Today's webinar is focusing on understanding the recent spring statement and the main takeaways from it. We will also discuss financial resilience and how to avoid financial pressures in the midst of rising costs and the support available if anyone is feeling financial distress or has debt or money worries as well. To enable us to start understanding this, I'm quite proud to say that we're joined today by Anthony Price. He's a partnership manager from Payplan, one of UK's leading free debt advice providers. He comes with extensive experience in the debt sector and professional qualifications in money advice and insolvency certification. So he's actually perfectly placed to help us gain insight and increase understanding of the debt and money landscape and what it means to be financially resilient during the current challenging times that many of us are facing. So thank you for joining us, Anthony. And then we've got Nicholas Hill. He's the Senior Advice Manager from Money and Pensions Service, and he was previously a digital proposition and product development manager for the Money Advice Service. He's also responsible for defining and delivering a digital service proposition for a range of financial products, including mortgages, borrowing, and insurance. So thank you both for joining us today. The way we're going to have it is that it's a panel-style discussion, and it's going to be quite interactive between the three of us. All the questions, please start putting them in the chat. We've got Jake from CiC who's going to support monitoring the questions, and we'll have some time towards the end to discuss the questions that have been coming up. So, let's just start this off. So we know recently the spring statement was announced, and it would be very helpful for all of us to actually understand this a bit more because there was a lot of talk around this. So Nick, I'd like to start off by asking you, what are the biggest takeaways from this year's spring statement for everyday individuals and families? And are there any new rights that people should be aware of?
Great question, Oliver, and thank you for having me. So this year's spring statement was very much a statement as opposed to a budget. Often we get lots of different announcements in it. So really, it's very much what happened around it before and after the spring statement, which is worth picking up on. So the big one for me was around neonatal leave and pay, which started in April. So as of April, if your child goes into neonatal care after birth and is in there for up to a week, then you could be looking at an additional 12 weeks of paid leave in order to look after your child. And that can make a big difference because if your child needs actual medical care, it's been very problematic. People have been having to use up their annual leave to try and support their child before their parental leave kicks in. So it's amazing to see that come into force. The child has to be submitted into neonatal care within the first 28 days and for 7 continuous days, and you take the leave in blocks of 7 days. So that's the real big one for me. There's a couple of bits worth just mentioning. Under 22s will no longer be able to claim health-related element on universal credit, and the stricter eligibility tests around personal independence payment. After that, we're really starting to get into legislation which is coming through in terms of the employment rights law. Would you like me to go into that bit?
I think that might be quite helpful, a little bit into that, just to provide some insight. Thank you.
So the government's reviewing the employment rights bill at the moment, and there's lots of change in it, and it's worth being aware of a range of things which are coming through that bill. They're not set in stone, so we don't know for certain they all will come into force, and we don't know when exactly they'll come into force, although a lot of them might well come into force in this coming year. And there's some amazing stuff in there. So we've got currently, for example, if you're an employee and you're earning under a lower earnings limit, you won't be entitled to a statutory sick pay. But if this new regulation comes in, the bill gets passed, you'll be eligible for statutory sick pay at a rate of 80% of what you're earning, and that's a day one right. Then the parental and paternity leave aspect, you won't be required to have a particular length of service before parental leave kicks in. The day one right for if there's a bereavement in your close family. So if you started on day one and somebody in your family died, you would be able to take an additional week leave to support your family and go through that tragic event. Bereavement leave in terms of for pregnancy loss. So at the moment, if the tragic event happens where you lose your child before 24 weeks of gestation, then you wouldn't be entitled to a bereavement leave. Whilst if this legislation goes through, then you would. If that does apply to you before the legislation comes in, do speak to your employer. Many will be fairly generous on that regard and try and give you the support and the time that you need. In terms of redundancy rights, if you're pregnant or for new parents, the extension of the protection from redundancy up to 18 months after birth or adoption, that would be amazing to give those new families that kind of sense of stability and security. A really interesting one will be around flexible working requests and employers required to explain the grounds for any refusal and why their refusal is reasonable. So it's really putting the employer really in the hot seat to really justify their position on why you can't have that flexible working request.
And is there a limit, Nick, on how many flexible working requests can go in? Is there more detail around that?
Yeah, great question. So it used to be you could make a flexible working request once a year. I think it's just come into force where you can now do it twice a year, which makes a big difference because a year is a long time to wait.
Yeah, it
if
is.
you really need that flexibility. But I'd encourage anybody, I think firms are a lot more open than they have been in the past to just having that conversation. Worst case scenario, they say no, but it can make a big difference to your lifestyle and maybe even free up a bit of time to do some managing your money type stuff. And lastly, just to mention 0-hour contracts, they're looking to push through that if you've been working on a casual basis for more than 12 weeks, you can request a more stable contract. It's not as strong as it once was, but that might help with some employees to get that security they deserve.
Thank you. That's very helpful. And I know that, Anthony, you had also mentioned before when you and I have had so many chats in different scenarios about mortgage changes as well. So I know a slight shift from what Nick has been talking about, but that's very helpful with the recent announcement. But you did say that there were some mortgage changes and I think all of us would be quite interested to know a little bit about that.
Yeah, absolutely. I think we've had a bit of a turbulent time for people with mortgages over the last couple of years, and that will continue for the next few years to come. So I think one thing that we're very mindful of at PayPlan is the number of people that are coming to us with the reality that they're coming off a fixed rate mortgage, and that leads to quite a significant increase, and whether they will be able to manage that mortgage payment increase or whether they need to get support with that or other debts that they have. So this year, we know that there'll be around 1.8 million mortgage holders who will come off a fixed rate. And a lot of those people will be coming off perhaps a 5 years fixed deal, and probably have been benefiting from an interest rate that's less than 2%. And a lot of those people will probably be moving to something like 5% mortgage, which is probably the average that we're looking at the moment. Information that's out there has suggested that the average mortgage increase for those people will be around £240 per month. And the reality is for a lot of people that will be very difficult to absorb and to actually handle. So one of the things that I always say is be ahead of the game. Understand what will happen or what could happen, and whether you're somebody where that's coming off a fixed rate mortgage imminently, and you can really understand how that's going to change, what increase that's going to lead to, or whether you're like me and my fixed rate mortgage isn't up for another 2 years, but I'm already using information that's out there, and whether that's mortgage calculators, whether it's understanding what the difference will be if a 1% increase happens, 2% increase. There are some very useful tools out there that will help you to plan ahead. And that's essential because that will help you to understand, can I absorb that cost? Do I need to do something about that? Do I need to look at getting some help with other debts to make things more manageable? And earlier, funny enough, we just had a conversation, didn't we, off screen about overpayment on mortgages as well, and overpaying mortgages to bring down the balance, so that helps with that kind of scenario as well. It's something I do. If I've got a few extra pounds, it's going on my mortgage to overpay to bring that down quicker, so that when I come off a fixed rate mortgage, it's going to help me to balance the book, so to speak. So planning ahead, essential. Understand what could happen or what will happen.
Yeah, and that's very helpful. And I know on the Money Helper website, Nick, which you're part of, because Money Helper, just for some of you might not be aware, is the consumer-facing brand of Money and Pension Service. And thank you for sharing the link, Jake. But on the Money Helper website, actually, what I quite like is that there are 3 tools you can use there. And I do encourage people to have a look at it. One is the mortgage calculator. And then the other one is about what can you afford, and the stamp duty calculator. And then you've got other tools as well. At the back of what Anthony is saying is that if you know your costs are just going to go up, Anthony, isn't it better to start preparing for those costs that are going to go up, whether it's been the next 3 months, 6 months, or even 1 year down the line? And what things do you need to either cut back on or be smarter in your spending, so that when that change does potentially happen, you are not completely in the deep end of it. That's the main message, isn't it, Anthony? And I'm sure you've seen this at Big Plan.
Yeah, absolutely. Being prepared, acting as soon as possible is absolutely key. We always have the philosophy of, really being ahead of that is better than prevention, is better than cure, always. So know what is available to you, act and get that support and advice from the right people.
Right. And before I just move on to the next bit, what I'll do is, Jake, if you could please share the link of the budget planners, because I do find that I know a lot of us are thinking, oh God, we don't want to do the budget planner, Nick. You know how it is. And Anthony's like, oh my God, a spreadsheet and keeping costs of what we're spending and all. But sometimes the fear is about facing the reality more than actually populating it. But when we do populate it, it actually will be a good reality check for all of us, and it becomes more tempting for us to make the changes that are needed. The budget planners that I find the easiest to use are the ones that's on Pay Plan and the one at Money Helper, and also those will be shared in the chat as well. And I do encourage people to look at that. There's also a really good savings calculator. I've played around with it as well. It's on the Money Helper website, so they'll be shared in the chat as well. But moving on from that then, and I think it goes in quite well into the back of the announcements, and then what you've talked about mortgage changes. And I was hit with massively every month, not the £240, but I was hit by nearly £600 a month, and at the same time, my Sky broadband has increased, council tax has increased, and, I'm surprised my hair's not going grey. Well, it is, but it would have probably gone more grey. But I think what I want to talk about is that a lot of us are worried about the cost of living. I think we can't tiptoe around that, especially as we've recently seen a hike in certain bills. For example, like I said, the broadband, council tax, various other subscriptions, even things like gym memberships have gone up. So, Anthony, you work in the debt sector, at Pay Plan. What are you seeing? I mean, have you had people reach out at Pay Plan who are worried about the cost of living? What kind of things are they worried about, and what can you share some insight?
Yeah, absolutely. I mean, the short answer is yes, we are absolutely seeing the impact of the cost of living crisis, because the reality is it's impacting every single one of us at different levels and different ways, but it's impacting all of us. I guess to give a bit of context to this, so at the moment, as a service, we're seeing around 4,500 new clients a week coming to us for debt help for the first time. If I was to give you the figure a year ago, that was 3,500 people a week. 2 years ago, it was 2,400 people a week. So you can absolutely see what's happening just with those numbers. And I mean, in terms of, I'll go through just to give a bit of an insight to who is contacting us, because I think that's important. And I'll also then move on to talk a bit about why people are coming to us, the reasons. So in terms of the who, I think it's important for people to hear in this group, and for anybody in society, it's the reality is it's everybody that's contacting us. There's no single sector of society that is coming to us for debt help. So a few demographical changes that we have seen, though, are this will come as no surprise. We're seeing more homeowners coming to us because, of course, mortgage rates, as we've just been discussing. We've seen an increase in Gen Z, so younger generations coming to us. We have seen increases in self-employed people coming to us. But interestingly, the first time in 12 years, we've seen an increase in higher end earning households. So people who will have a higher income coming to the home. And I think that really shows that, there is impact to everyone. If you earn more income, you may have higher mortgages, you may have higher rental payments, you may have bigger car payments that you're paying for if you've got finance. So people will be impacted at every level. In terms of the why people are coming to us, the majority of people that come to us every single day, it's because of a change in circumstance, and whether that's something like cost of living crisis, whether it's a job change, whether it's family growth, those types of reasons, and there is very rarely just one single reason why people come to us. The average client comes to us with 7 different debts, and so often they're juggling a lot of things at once, but often it's one particular debt that may lead them to reach out. It might be that letter that comes on the doormat, it might be the knock at the door from someone, it may be the fact that this month I can't pay my mortgage or my rent. So often there's something that will trigger them to come to us, but often there's a range of debts that people need support with, and that's where we come in to try and make that easy and to help them to navigate through that as easy as possible.
Thank you for that, Anthony. And Nick, what I'd like to just ask you is there anything in particular, in your opinion, that people should be aware of where cost of living is continuing to go up?
Absolutely. I think just to start from the high level, people don't have to struggle with this alone. There's lots of free support, whether it be just going to a website or calling up for help. There is lots of support available. So you've got, obviously, we're showing some of the links to Money Helper. You've also got amazing organisations like Which and Money Saving Expert, and you'll have many local organisations which are there ready to help you. You've got Pay Plan with its financial wellbeing hub and the employee assistance program. I would encourage anybody to make use of these services. I've done that myself, and it really makes a difference getting expert help at a time you're having to make a decision about something you don't do every day. Now, I know it can be hard to find time for these things, but it can have a huge impact. A good example would be, I was chatting to my neighbour, and he's on £70 a month for broadband. I'm on exactly the same contract, but I'm £24 a month. That's a lot of money. And all that it took was like a 20-minute call to haggle the price down with the same provider. I didn't even have to switch. So there is money on the table for some people, and we know that some of the lower income households are some of the best budgeters because they have to be, but it's always worth doing every so often a little bit of a sanity check, because we are being sold to, and firms are trying to encourage you to spend more. They want you to sign up those subscriptions which you forget to cancel because you were planning to only use it for a month. So it's really important at least once a year just to do that housekeeping bit.
And I think you've mentioned a good point there, Nick, about there is support out there, but people don't feel at times that they're able. So if I bring in a work environment, so everyone on this call, we're all employed, we're in work. Some people can't discuss this at work, isn't it?
Absolutely.
And so they have to leave somehow, switch off these worries when they're at work. But we all know that money worries don't actually leave you. You can temporarily pause them while you're working and all. But some people will be nervous in speaking about it to the employer. So, Anthony, you and I have discussed this before, that some sectors find that within certain sectors it's harder, or people find it harder to talk to their managers or to their employers, and all. Is there any insight you can share why people feel that, and what would your advice be?
Yeah, absolutely. I mean, the fact of the matter is, across the nation, we are very private with money matters anyway. So we often don't talk openly about such things, full stop. But when we add in a layer of complexity because of perhaps professions and industries that we work in, that can amplify that. So we do find that often is a real problem, and it can often mean that people delay accessing support, and I can share some insight into that as well later on. But I guess the biggest thing is to give reassurance to people. So if I was to say to everybody here that as a debt advice service, we were first set up as a dedicated support service for police officers, because back in the early 90s when we first set up, police officers had to be very careful and mindful of getting the right advice and to make sure that that didn't impact their career progression. So we were that safe pair of hands, and that has really expanded into making sure that people from all sorts of different sectors can benefit from the same type of support, safe, trusted. So whether that's the police, whether it's the NHS, whether it's security, whatever you may be in terms of career and role, if you've got to go through some form of vetting or checks, maybe you have to get credit reporting checks, it's important to get the right advice from the right people that understand the impact that can have, and to give you the right guidance, and to make sure that you're given the right advice, you're given the right solution that protects that for you and allows you to make an educated decision and an informed decision, which is really, really key. So certainly that's where experts can come in, and they've got the right background in understanding what type of safety checks you've got to go through, and that's exactly where we can come in and do that.
Thank you. And I think that's where also an EAP like ourselves come in as well, where if people genuinely feel they can't speak at work or speak to their manager, and like you said, there is a cultural element to this of being quite private about money and not speaking about financial vulnerabilities that people might be facing. The EAP, we're a confidential service, and if someone just wants to talk, it's not about just getting the counseling help. It's about that in the moment support of just getting that help to get it off your chest of these worries, and then let us do the hard work for you and with you. And I think that's really critical, because when you're in that frame of mind where you might be feeling quite vulnerable because you can't make certain financial decisions due to whatever reason, you need help. We all need help. We all need that, at some point in our lives. So I think that's quite important. There is, I know Jake has shared in the chat already, but I do want to mention that, and these are the particular ones that I've picked out, that on PayPlan, Anthony, on PayPlan's website, there's a really good financial education piece on which you guys call the Financial Wellbeing Hub. And I do suggest that everyone goes through that and has a read about things like budgeting and banking, types of credit and debt, how do you maximize your income? And they're quite easy reads. They're not detailed. They're bite-sized chunks. It lands on you easily, how to reduce your spending and all. So just go and have a look at that. And then following on from that is on the Money Helper website, which again, the link has been shared. There is a section on just about the cost of living and do you need help with the cost of living? And there's a lot of sections in there, whether it be family care, benefits, savings, homes, pensions, retirement. And there's one section in there too, actually, which I really like, which is your everyday money and tools and calculators. And Anthony and Nick, I'm sure both of you will agree with this. This is what brings it to life on what we're facing on a daily basis. And the everyday money, what I've seen is, again, it's about banking and payments. What do you need to be aware of it? How do you work around it? How do you educate yourself? What tools are there? There's again one section on buying and running a car. Those things that we're hit with about insurance costs going up. My own pet insurance, I got a bill a few days ago. Actually, it was just on Tuesday, that it's gone up by £200 a year, even though I've not claimed. In the good old days, if you didn't claim, either the money doesn't go up or it reduces. Here, every year it seems to go up anyways. So I think it's quite good to have a look at what tools are there available that people can just play around with and apply to themselves in the situation that's applicable to them. But I think it's about the cost of living, and are there any tips specifically to cut costs? I know there's a lot of information on the Money Helper. We've shared the tools, the links, but are there any quick fixes? By fixes, I mean any quick wins that people can think of that, okay, that seems I can do it to cut costs for energy, mobile, broadband, water subscriptions, car costs, anything that, you know, our audience can benefit from.
Absolutely. This is one of my favourite topics. I love going through ways which we can save, particularly if the listeners can try and pick one of these things, just one of them, and then try and action it to see if you can save yourself some money today. So let's start with energy. For me, I've just recently switched to a fixed deal, which I know is now saving me a bit of money because the rates have gone up a little bit. It's really easy to switch energy. I know many people have switched off to this year because we've been on the cap. We don't have to worry about, there's no savings to be made, but now there are, the market's starting to open up again, and it is worth double checking whether you can make any savings. So I would go and use the Money Saving Expert Credit Club or the Which website. Both are brilliant. You'll find links to them on Money Helper website, and that will help you do a comparison to see whether you can save and who to switch to. And it's so easy to do these days. What you'll need to do is get one of your old bills. So whoever you're currently with, dig out that bill ideally, and on there will be the details you need to enter into those comparison sites, which will help you get an accurate estimate of how much you can save. Moving on to mobile bills. So the big one, which I really do not like in the sector, is that if you're paying a mobile bill contract, which is paying both the mobile off and for the network, you get to the end of your contract, you paid off your mobile, but they still keep charging you the same amount. So it's really worth double checking whether you can move on to a SIM only deal, because the savings will be huge. For me, I bought my mobile outright, and I'm on a £4 a month deal, and that's with more data than I know what to do with. I was shocked when I checked last year just how low the rates are getting for mobile phones. So it really is worth checking to see what you can squeeze out. But as ever, figure out what your usage is, because you want to make sure you're buying only what you need, not just a load of extra stuff. It's not a discount if you don't need it. It's just more money. In terms of then on mobile, it's also worth checking your location and making sure you're getting good coverage, because again, you want the mobile phone to actually work in your location and for the types of traveling around the country or world you're doing, because the fees you can get when you travel abroad can be quite significant. So if you're doing holidays abroad and you need your phone to work, double check whether it will work in the country you're going to, because otherwise those fees can really sting. Broadband, another classic. I don't know about you, I always feel a bit nervous about switching broadband because we're so reliant on it these days, whether it be for TV or work. The fear of having to switch providers can be quite significant, but it's way easier than it used to be to switch. And they've only last year they brought in one touch switch, which means you've got BT, which runs most of the networks, and most providers are buying off BT for the broadband, and you could switch within those relatively easy, but you can then switch over to Virgin. But now you've got one touch switching, which means it's as easy to switch from Virgin to the other providers. And this means there's deals to be had, because firms know that exists. They know it's so easy to switch. So you call them up, and I was shocked at how easy it was to haggle. They just moved my contract up to £60. I managed to get it down to £24. And that's big saving. I have to work hard to earn that kind of saving, but that took me a 15-minute call. So the way to go about with that one is go onto one of the comparison sites. Money Saving Expert would be my go-to one on this, and find out what the best deal you can get for the usage that you actually need. And once you've got that, you can then ring up your provider and tell them, I need that deal. This is what I'm going to switch to, unless you can match that rate. And often they might well just say yes, in which case you have to do nothing else. You don't have to switch, and you've got the better rate. Or if they don't, well, you know that you've got the power to make that switch. Next, just briefly mention water. Less money here on the table, really, because you can't switch, so to speak. But it is worth checking whether it's worth having a water meter installed. And if you're getting super frugal, which I struggle to do, is having less showers or baths, but I can't quite bring myself to do that one. But if you're in a house, a good gauge, and because it is worth checking whether it's worth moving on to a water meter, because otherwise it could cost you more if it's not suitable for your usage. But basically, if you've got more rooms in your house than you have bedrooms in your house than people, then there could be worth considering a water meter. But the links we've got on our website will help you pick out whether it's right or not for your circumstance.
Thank you for that, because that's quite helpful. Because the other thing I found quite helpful for myself was combining certain insurances with the same provider. It turned out cheaper. So, for example, my car insurance is with a provider, and when I was looking for pet insurance, it was phenomenally high. But actually, when I joined it with the car insurance provider, it literally became half. Yes, they've started charging me £200 a year extra this year, but I'm going to haggle that down. Or,
insurance is a big one. We've seen the fees on insurance go up across the board. And I'm shocked at how much you can save when you get this standard letter from the insurance company going, this is how much you're going to pay next year. And it's jumped way above inflation. And within a few phone calls or checking on the website, like, I don't have to pay that. I can get it significantly cheaper. So you're exactly right, Arthur. And car insurance is a big one. But if we're talking about cars, the other thing is thinking about proactive maintenance. So if, for example, you're coming up to an MOT, actually you can do quite a lot of the checks yourself. Or if that's something you don't feel comfortable with, ask a neighbour around for a cup of tea or buy them a box of chocolates to do those checks, because the kind of fees which the firms can check you when they're doing their MOT, they can charge you significant money even just for topping up the windscreen wiper wash. So if you can do a lot of that proactive maintenance yourself, then you can save, but also you might spot some things, which means you don't end up with the breakdown with the bigger fees and the towing and everything else. So I'm a big fan of trying to get on the front foot with these and avoid it. With fuel prices, you can check online. It's really easy to check. There's on our website, we link to the organisation with a couple of websites where you can check the local cheapest fuel. To state the obvious, you don't want to drive too far to get the cheapest fuel, because otherwise it's not worth it.
Yeah, it defeats the purpose. So yes, thank you for that, Nick. Yes.
Sorry, one last one on that. And this one's the biggest, but it's the one that people like to hear the least. If you don't need a car, don't have a car. If you're in a city, some people it's essential. You've got to need the car to get to work. But if you can avoid having a car, the average person used to be over £200,000 over their lifetime. You could buy a flat with that. So I know there'll only be the odd person on the call that might apply to, but if you can avoid having a car, that's the biggest way to make a huge saving.
You're absolutely right. That was all very helpful. So thank you. And I'm just conscious of time because I want to leave some time for questions as well. But there's one other thing I wanted to ask because of the cost of living and the recent announcements of the spring statements and all that. People sometimes do worry about paying bills and which bills take higher priority than others. And I know, Anthony, we've discussed this in a previous webinar as well, but, this is there's new members in this audience as well. And I think it's about just very quickly for them to understand that in such a scenario, what are the common mistakes people can make when paying bills or not paying bills? And any tips for people to understand how to prioritize bills?
Yeah, of course. I guess one of the things that I would attach to this is we've touched on it briefly, but first of all, actually understanding where your money's going to and where it always going out to is essential. So that whole budgeting piece. Interestingly, majority of people that come to us for debt advice haven't put together a budget in their life before doing that, and sometimes because it can be daunting. So there are some real benefits of putting together a household budget, and the biggest one is really clarity on exactly that. Where is my money going, and what kind of things can I do to make a change if I need to? And a big part of that is understanding where your priorities lie, and that can be hard to know because it can be quite overwhelming. Sometimes we have lots of costs going out, and where do I start? Which ones are more important? So a few things that I often find, and what my years of working in debt advice is making sure that you prioritize the right things first over other things that may seem like a priority, but they're really perhaps not. So I'll just quickly discuss what we would class as being priority costs versus non-priority costs, or priority debts versus non-priority debts. So if somebody came to us and they had rent arrears or mortgage arrears or council tax arrears, those would be deemed as priority debts. And the reason for that is because the consequences of not paying those are more severe than other types of debts. For example, if you don't pay your rent or mortgage, you could be homeless. If you don't pay your council tax, that could be prison time that you could serve. So there are severe consequences, whereas non-priority debts, and that could be things like credit cards, unsecured bank loans, it could be overdrafts, there are less, I'm not saying there aren't consequences, but there are less severe consequences of not paying those as a priority. So it's very important to understand which debts rank in what order, and that's where debt advisors can give you clarity on that and guidance. So that would be number one. Interestingly, 44% of people that are coming to us at the moment for advice have both priority debts and non-priority debts. So it's quite common that people have both, and so getting the advice is correct, you know, the correct thing to do. Getting advice at the right time is also key here. So I would always urge people to not delay, because the longer that people delay getting support and help, often that's where debt problems can then escalate to debt emergencies. 61% of people that come to us each day have delayed access to debt advice by over a year. 21% is over 4 years, and the impact then to mental health and well-being is quite key, or quite clearly demonstrated. So get some advice as soon as possible would be another thing. And then a few other tips I would have. First of all, be aware if you are borrowing. So, you know, inevitably during our life, there will be times where we may need to borrow. It can be a thing that we need to do. First of all, always do a step back and go, do I need it or do I want it? If it's a need or a want, you know, that will help you to prioritize. What type of debt am I borrowing? What type of borrowing am I looking at? One that I talk about quite a lot at the moment, I think we've talked about this on a number of occasions, is buy now, pay later.
Yes.
Buy now, pay later has become a real mainstay in terms of you know, people accessing credit and borrowing. And originally, buy now, pay later really came in as a way to bridge the gap. If my washing machine, if my fridge freezer suddenly dies and I need to replace that because that is, you know, it's something I can't function without, it's a way to normally spread that cost over normally 3 months. So it helps me just to make smaller payments, but to get the item I need now. The problem we're seeing is that people are coming to us who have borrowed that type of loan, buy now, pay later, but they've borrowed it for things that aren't essential. And I'm talking about things like Chinese takeaways, pizzas, it's takeaway meals. If you're starting to stray into that kind of territory, that should be an immediate warning flag. You know, that isn't a need, that's a want normally. You don't need to take away. You might need food, but you don't need to take away. That can start to get very expensive, and also will start to lead on to doing that month by month. Another thing I'm asked a lot about at the moment are the types of facilities that are available where you can draw your salary down early. So this is quite common within the workplace now. There are certain organisations that the workplace make available to you where you can draw down a percentage of your income before payday. Now, that can sometimes be very helpful, especially for potentially emergency measures and as a one-off kind of scenario. So it's not that that's not a useful thing to have in certain instances, but I would always urge people to be very mindful of doing that if it's not needed. But also the question of, how am I going to get by to the next payday? Because if you're going to find that you're going to start drawing down every month, there's a cost of doing that, and you'll get into a very, very challenging cycle. You'll end up just doing it month by month, and it almost becomes another overdraft. So just be very mindful of doing that as well, and look out for the signs would be my final tip of when financial well-being maybe isn't at the right kind of balance. Are you using credit just to get by every month? I won't be able to go and fill up the car without my credit card or buy the food that I need. Am I using credit to pay for credit? And if some of those are starting to emerge, then that could be exactly the right time to get some help. Look online, come and get some debt advice.
Thank you for that, Anthony. And I think there's another point linked with it, and that's about pension. And, you know, I would like to say that many people think of accessing their pension early or paying less to help manage their bills. And all, and sometimes this can be quite reactive, or even if they've thought it out with their family members and all, there still needs to be more thinking. So, we're running a session on pensions later this year. So anyone who would like to attend that, I would strongly encourage yourselves to attend that session. However, if anyone at the moment is considering making these changes to their pensions, where they want to put less money in to access their pension earlier, I would highly recommend that you reach out to a team at Money Helper. They've got a pensions team over there. There's Pension Wise for those over the age of 50 as well, and they can guide you through the right channels and help you with the onward steps, because this is where experts come in. We might think we know it. I might think I know it all, but actually when you speak to a subject matter expert in that field, it's a free service offered by the government as well. We should be taking up that offer and really making sure that we do all the due diligence before taking out that step. So I know the link to Money Helper will be shared of the pensions team as well as Pensions Wise. It'll come up in the chat, but I think that's where I wanted to end that bit. The next bit, which is the last section, and all, is to end it on a positive. Well, all of this has been quite positive. But Nick, it's about, where you and I have discussed about the best schemes to help people save. And I absolutely love what's on the Money Helper website, about lifetime ISAs, premium bonds, junior ISAs is mentioned. There's a whole slew of things that could be applicable to people in different ways. I mean, I'm a big fan of premium bonds. I've done it for years now, and I just like it. But is there something you'd like to talk about the best schemes to help people save?
Yeah, and that's also a tricky topic, because if people are stretched financially, not everyone can afford to save. But it's really important to try and save, particularly for those unexpected bills we all know are guaranteed to come up, whether it be the car or the house. So putting a bit aside. I think the first one I'd really want to pick up on is the Help to Save account, because if you're getting universal credit and you're working, then the government's willing to give you a 50% matching bonus. So if you're eligible, you definitely make use of it. You pay enough taxes all your lifetime. It's important to grab free money when it's available. So basically, you can save £50 a month in it for the first 2 years, and that means you'd end up with a total saving of £1,200 on your money alone. But at the end of those 2 years, they'll give you £600 to top it up, and you can do the same again for another 2 years. So that's potentially £1,200 up for grabs. So if you're eligible, it's well worth looking at. You've obviously talked about pensions. That's an amazing tax efficient vehicle for saving for your long-term retirement. And definitely, yes, if you're thinking of acting early or even reducing the amount, it's worth speaking to somebody to make sure that you understand the implications available. And then in terms of something a bit more flexible, ISAs really come in, because we all pay a lot of tax, and I don't want to have petty tax if I don't have to. And so making use of the tax free allowance through ISAs is well worth doing. And the two main options here is cash or investments.
Yeah.
If you're not looking to touch that money for any time soon, i.e. 5+ years, ISAs are really smart, and investment ISA is the way to go, because you're potentially going to make more significant returns. Obviously, your money's always at risk. But if you're more risk averse, you can also look at cash ISAs. And then you've mentioned NS&I premium bonds. They're a good scheme. It's not as high interest potentially on average that you can earn elsewhere. But if you need a flexible, significant, large sum, it's worth considering. I wouldn't try and hold personally small amounts in it, because the rate of return is so low. It's a weird scheme where, in effect, you're put into a lottery to earn some money, and that means you need a significant sum, i.e. 30 grand plus, 30 to 50 grand, to be getting that higher rate of return, i.e. winning enough prizes. If you're getting down in this UK's, doesn't make as much sense. And then if you're in a really luxury situation, you might even start thinking about children's pensions, junior ISA. These things make a big difference, because if you put some money in a children's pension and it's sat there in investments for 50 years, the returns are phenomenal. Compounding is a beautiful thing.
Thank you. Thanks for that, Nick. And that's why I wanted to and on that, and thank you for that. Thank you both for it. And this has been very helpful and insightful conversation. Before we open it up for the questions and all, I do want to say that to reach out to us at CiC for any help and support that you need. We are EAP provider. We're here for any support that you need, because we all know the relationship between financial vulnerabilities and the impact on mental health, and vice versa as well. So I'm going to open it up for questions and see if anyone has any questions for Anthony and Nick. I have seen there's quite a few recommendations that people have made about different things. I quite like the one about the best cheap haircuts in London. Wasn't aware of that. I'm going to check it out. But are there any specific questions? Sorry, Nick, go ahead. Yes.
I was just some people have shared very helpfully the various discount sites, Groupon and things like this. And those can be great ways to get discounts for the things you really need. But you really got to understand your own behavior, because the reason they're offering these discounts is because they want to encourage you to spend more of your money. If you know yourself, if you're one of these people who will be like just chasing that deal for the sake of it, just ignore all deals. It's not worth it. I'd stay away from them. But if you can be really disciplined and stick to your shopping list and stick to the things which you really are definitely we're going to buy regardless, then it's a real discount. And there's things like, if you're in the NHS, for example, you've got the blue light savings scheme, blue light card. So it's well worth checking on that as well.
The other thing I would also add would be, again, it goes back to that want and need, because that's absolutely right. If you're buying something that you need, or even if it's something that you want and it's something you can afford, that's okay. That's an absolutely key point. Always halt and think, can I get cash back? Always halt and say, can I get cash back? Whether you've got the right bank account that gives you cash back or a cashback making app, that can bring in quite a significant amount of money just from buying things that you would have bought anyway. I mean, I do it on pretty much any online purchase that I'm about to do. I halt, I go through one of the cashback facilities and I see, can I get some money? Because that adds up over time. So cashback really, really key to make sure that you're getting the right money in your pocket. And just on savings as well, because we just talked about savings, the other thing I just want to highlight, because it's a common question I get, people will say to me, can you save if you're struggling with debt? Can I actually put savings away if I'm getting debt advice? And that's something we actively encourage, because it goes back to what Nick said about a rainy day fund. It's about having some financial resilience. It's important that even if it's a tiny amount, that you're just building up gradually. And it's just about the habit of doing that. That's equally as important if you're getting debt advice as if you're not. So saving is for everybody. And that's where we advise and support you as well, to make sure we can give you an idea of what you could be saving alongside getting the right debt help and solution.
And I think that's key. That's really helpful. We've had a question pop up, and the question is, if you have no debt other than a mortgage, in general, is it better to overpay a mortgage or save money elsewhere?
It's a great question, and there are different things to consider. So you've got to really look at where else you could put your money. So if you're risk averse and you're only putting it into a cash savings account which is earning the same amount you're paying your mortgage, well, and you've already got your monthly pot set aside, might as well just pay off your mortgage and clear those debts. But if you're going to put the money aside and leave it invested for a long time and try and get those bigger returns, then maybe putting the money into investments is a good idea. But then you've got the behavioral aspect of, if you're a person who's stressed about having a mortgage and getting it overpaid, maybe it's best for you as a person to actually overpay it and know that it's low enough for you as a person. So there is an aspect of how much, what makes financial sense and what's going to work in order to keep your mental health.
Yeah. And also, if you're overpaying onto a mortgage, that's pretty locked away. So I always encourage overpaying on mortgage. But if you've got zero savings, because that's something we don't know for this question, having some level of resilience and savings in a rainy day fund is important, because you can draw on that and access that really easily. If you've only got it in the mortgage and you can't access that again, so what's important to you? What's your starting point? These are all questions to ask yourself as well. If I've got no savings, then yeah, what do I need to build that up as well? And the answer could be both. That's the other thing, isn't it? And I think absolutely that mindset point of view that Nick's just said is so key with this. There's a lot to be said for being able to sleep well at night. A huge amount. It knocks onto everything in life. So if that helps you to do it, wonderful.
Thank you. And I think that is important about the impact on one's own well-being and mental health, and how will it be as a behavior, just like Nick mentioned. I can't see any more questions. However, I know what has been shared is some feedback. If I'd be quite grateful if people could just answer these couple of, I think it's just one or two that will pop up. I'd be grateful for that while we're just waiting to see if there's any more questions coming up.
While we're waiting for questions, there's one other one it's nice to mention in terms of the behavioural aspect, which Anthony picked up on, and that's delaying purchasing. In terms of, in his example, it was checking if you can get cash back. But there's also the aspect of, if you're going around shopping for things, that impulse control of, if there's something you want to buy, why don't you do all your other shopping first, and then you can always come back to it. But if you forget about it, and it clearly wasn't that important, and I've done this with myself, you've made the biggest saving because you haven't actually bought the item. And there's another site called UK Camel, and basically it's a price tracker on Amazon, so you can see what the real price of the item is, so you can avoid buying at the peak. But the other trick which it does is you can set up alerts, so when it reaches the right price, it will tell you, and then you can purchase at that lower price. But the big win for me personally has been, you set up the alerts, but then you forget about it, and you end up not buying the item. So it clearly wasn't that important.
I love Camel. Good one, I think.
Yeah.
It's true, that whole delay tactic, will it make me feel better for 10 minutes, or will it make me feel better for months to years to come? And often it's 10 minutes, isn't it? It's a quick endorphin hit. So yeah, delay, always a good thing.
Well, I'd like to thank everyone for attending this today. I'm hoping everyone found it helpful. Please do put in recommendations in the pop-up. If there's any feedback or suggestion, do let us know. Our next webinar is coming up in the summer on mortgages, but we've got quite a range of financial webinars coming up in different formats and on different topics as well. So please do keep a watch out, and we encourage you to join it. It's all about learning from it and applying it in the way that you see fit in your everyday life. But if there are recommendations, please do put it in. But Anthony and Nick, thank you so much for your time. I'm extremely grateful for this, and it was extremely helpful